Thank you very much, Chairman. Good morning, everybody. And I will start off by analysing the 2020 fiscal year from the economic and financial perspective, and I'm also going to move on to the details of the major progress made in the ASG management practices of our company. And then I will continue with the results of the first quarter that we've just published at the board. And I can advance and anticipate that the results are very good, and we have reached historic records. Under item number 4, I'll be talking about the goals for 2021. Everybody will remember that in the publication of the Q4 results, we set some objectives, 4 goals in particular, that we believe were very cautious, and this is why today we have reviewed them, and now the commitment of our team is much greater than it was before in terms of 2021. And finally, there's an announcement that I would like to leave until the end. So without further ado then, I'm going to kick off with the analysis of the 2020 fiscal year. I think that everybody recalls that the first quarter of the year was a historic record. The second quarter was a quarter when we practically could not produce, and then in the third quarter we had a ramp up and we obtained some very outstanding results, and in Q4 we closed again with another historic record because our percentage of EBITDA stood at 17.6%, 16.7%, which was greater than the Q4 pre-COVID, Q4 of 2019, and the net results of all the group after a decline of nearly 21% of the THEA market was 185.2 million euros. And by applying our management model focused on generating cash in the 2020 fiscal year, we generated 239 million euros. And we have still maintained our commitment, even in spite of the year of COVID, with our shareholders. And we have invested about 190 million euros, well, in particular, or more specifically, 189.3 million euros. Even though the major cash generation has allowed us to make this remuneration and to reduce our financial debt to a similar perimeter, and it now stands at 40 million euros. And the liquidity reserves are something like 1.5 billion euros. And we feel very happy because after a very slack Q2 in terms of production, in the first half of the year we've managed to strengthen our employment, and we've increased our workforce by 1,118 people. And that means that we now have 25,196 people working for the company at the end of the fiscal year. But if we look into sales, and always comparing ourselves with the market, the THEA market, as I pointed out before, had a slump of nearly 21%. And THEA has had a behavior 7.5 percentage points better than the market. And China, for instance, where the market has dropped 4%, and THEA has grown 34%. India, where the market dropped 23% and THEA 17%, and Brazil, where the market slump was 32% and THEA 23%, and North America, the market slumped 19% and THEA 17%, and then Europe, the market slumped 22% and THEA 18%. So in other words, we have increased our market share this year and in all the geographic areas in which we are operating. But let's continue now with the analysis of our operating accounts, and we managed to close the year with a business figure of 2,882.5 billion euros. And we've had a negative impact in terms of currency conversion of 140 million euros in terms of sales. So we've closed an EBITDA of 15%. 15%, which in absolute terms, it's 431 million. And I think that everybody knows that after the integrations of 2019 and 2020, the pro forma EBITDA of our group was 16%. So what that means is that in a time of pandemic, we've only lost 1 percentage point in terms of our profitability. And EBITDA stands close to 10%, 9.8%, with 283.4 million euros. And what I mentioned before, we have profits totaling 185 million euros. But if we now analyze these results and the contribution made by each division in terms of sales and EBITDA, Well, as usual, North America is contributing more in terms of EBITDA compared to sales, and then we have the other geographic areas of Europe and Brazil and Asia that are more or less contributing the same amounts. And it's only the part that we call the Mahindra Thea in Europe that has to do with trucks, but that has to do with the German forges too, where the contribution in terms of EBITDA is lower compared to sales. But I'd like to point out that in this fourth quarter, we've managed to improve margins in all geographic areas compared to 2019. But if we move on to cash flow now, before we said that we closed a COVID year with an operating cash flow of 59%, 239 million. And let's say that in the same perimeter, as I said before, we reduced debt by 40 million. So the financial flow was negative with 73 million, and this is the end result of paying prior acquisitions and also of applying business combinations in the year, which are the purchase of the Somaskini company and the purchase of more Mahindra Thea shares that has allowed us to achieve 60% of the company. And the net financial debt stands at 1.594 million euros, which is adjusted to the cash we have in China. Well, it's 1.5 billion euros, and it's obviously that the ratio is 3.59 times, which is the end result of consolidating EBITDA in the last 12 months, where we have the second and third quarters negative in 2020. So this is why we have a covenant waiver that will cover us until the end of June. So I think that what we have seen is that our management model and that our strategy focused on profitability has overcome the COVID problem. But 2020 has not only been about figures for our company, and thanks to the collective effort that has been made by all the people working for Thea. Because at Thea, we are generating lots of value in our environment. Firstly, by defending the investments of our shareholders. And in 2020, the Thea shares were affected by the COVID-19 pandemic. And you know that shares set out at a price of 21.08 and that were already suffering from the global geopolitical convulsions and the uncertainty we had in the previous years. And they dropped down to 10 euros in March and then climbed back up to 22.06 euros in December. So in view of this sudden drop of the value of our shares, we decided at Thea to implement a repurchase plan so that we could reduce 5% of its social capital. And this did not only mean that we managed to boost the price of the shares, but we also increased the future remuneration for each partner that will be higher with the same number of shares. And also in 2020, we have given information to analysts and investors, normally telematically, and this year we've managed to meet up with about 600 investors. We've been involved in 16 roadshows and 16 conferences too. But not only that, but we've also offered solutions and reliability to our customers. So in the midst of the pandemic, when very few component suppliers found that it was difficult to meet their obligations, at Thea Automotive we have demonstrated how reliable our supplies are and the top quality of our products thanks to suitable planning of our production and thanks to having focused our investments on the development and the already committed projects. And in a context in which we are trying to accelerate the implementation of electric cars, we showed that we were capable of offering resilient and adaptable solutions according to the different market trends. And of course, we also guarantee the safety of our employees because the pandemic represented a complete change in the management practices of our professionals. And in this unpredictable environment, safety of our employees became the main objective for all of our activities. At Thea, we offer workers a decent job and remuneration according to their position and their skills and training that will allow them to grow professionally in a healthy and safe working environment. But apart from their salary, the group also supports its workers with a number of social benefits that have improved their quality of life and the quality of life of their families, and which in the 2020 fiscal year have represented an investment of nearly 25 million euros in medical insurance, in food services, in aid for transport and education. And in a sector that is undergoing a transformation process, which is our case, where the survival of these companies depend on a large extent on their possibility of acting to new market trends, the learning process of employees is a key element to improve competitiveness. As we know that training is very important, at THEA we've provided more training for our professionals, and we are offering them growth opportunities through mobility and training courses. And also in this fiscal year, we've also reinforced our collaboration with our suppliers, because our purchasing teams or procurement teams have focused their work on optimizing the supply chain from a qualitative and quantitative point of view, so that continuity can be given to the business and so that we can overcome the difficulties that have been brought about by the new COVID-19 reality for the nearly 23,000 suppliers that have helped to create their value offer. And purchases exceeded 1.9 million euros with these suppliers. And the traditional approach of our group in favor of the local business system was confirmed during the times of the pandemic, because we've reduced logistic expenses and customs duties, and we've also diminished the exchange rate danger or risk. And during this fiscal year, the percentage of local suppliers was 92%, who accounted for 79% of the purchases of the group. And according to the standards of our group in terms of homologation of suppliers, one of the key issues has to do with the audit that we carry out with suppliers, so that we can analyze whether they are suitable or not. And in spite of the difficulties experienced during the COVID-19 year, the number of audits performed was 353. And obviously, we reaffirm our support to society as part of the ecosystem of automotive components at THEA. We've been involved in a number of national and international forums that in 2020 defended the sector in view of the situation that had been brought about by the pandemic, and we maintained a dialogue with institutions so that we could define mobility in the future. The company, THEA Automotive, has generated value for its interest groups and for society at large. In 2020, of the 2.88 billion euros generated, we have paid out 2.3 to society in the form of benefits for employees, payments to suppliers, dividends, and payment of taxes. And in 2020, we've also made contributions towards social action programs totaling more than 950,000 euros. And we've involved more than 1,500 workers, which meant that more than 12,000 hours of work were carried out. And then in this fiscal year, we've also maintained our major environmental commitment too, because what we want to do is fight against climate change by gradually decarbonizing our processes and by implementing a circular economy throughout our entire value chain. And in this fiscal year, we focused our efforts on compiling the data from the plants to calculate our environmental record, and complex process that would allow us to discover all of the impacts that are associated with our activities, and therefore we'll be able to take a much more suitable decision so that we can reduce these effects. And the calculation of our environmental footprint considers 17 variables, from the destruction of the ozone layer all the way to the transformation of the natural soil. And we are also advancing towards a circular economy, and we're trying to reduce every year the consumption and waste of raw materials, water and energy. I would like to underscore that 100% of the electricity that we've consumed at the Spanish plants comes from renewable sources, and also that we've taken the first steps to implement self-generation of energy with PV facilities in Spain, Portugal and India. So this progress made in terms of energy efficiency have reduced the relative emissions of our group, totaling 10% in the last 3 years. At THEA Automotive, we are intensively using water in the manufacture of parts that require the processing of materials at high temperatures. And in order to reduce as much as we can waste, we have our own systems for water treatment and for its recovery. In 2020, the consumption of water was 1.4 million cubic meters, in other words, 12% less compared to the previous year. At Thea Automotive, we also have a recycling system that allows us to internally reutilize thousands of tons of returns that come from the different production processes. Those that cannot be recycled are collected by specialized centers that prioritize recycling instead of taking them to landfills. And in 2020, only 13% were sent to landfills, whilst 87% was reutilized. And in particular, I'm talking about 282,000 tons that were reutilized. And we also collecting used oil from restaurants, hotels, schools, factories, so that this oil can be subsequently processed and transformed into biodiesel. In 2020, we've managed to collect 4.5 million litres of oil. Thea Automotive contributes value to the company, to its interest groups, by integrating its business model in its strategy and its daily activities, and by implementing social responsibility criteria. And in this fiscal year, we have made further progress in our commitment towards environmental, social, and good governance values by establishing a new organizational chart for all of the plants in the group with 79 AST indicators. And apart from that, we've also deployed the penal compliance model in Mexico, Brazil, India, and China. And as regards its contribution towards knowledge in terms of penal risks and in our fight against corruption, in 2020 we implemented 2 online training actions for the board, for the senior management, and for the global management team. And these training workshops intend to disclose the policies and organs of the company in these fields, as well as the tools and the procedures that had to be followed, so that we can make people aware of the benefits and also achieve their participation. And we also reaffirm our commitment with regard to long-term sustainability by linking the cost of funding to environmental, social, and good governance criteria. And in this manner, in the month of June, we carried out the novation of the syndicated loan totaling 690 million euros, and it's now become sustainable funding. This novation is added onto other fundings that we believed are associated with sustainability criteria. So in total, they account for 40% of the net financial debt of our group. But now, finishing with the review of 2020 of the main events that have been reported, I would like to end by saying that in 2020 we also reinforced our global position with the purchase of the Somaskini company. That now means that we are the top player of gear systems in the world, and we've opened up new centers like the plastic division in Mexico and the aluminium division in India, and we also have a greater share in Mahindra Thea. And this is a group that has resulted from our strategic alliance with Mahindra and Mahindra. So if you want, I think that the time has come now to move on to the 2021 fiscal year. And as I said before, the third item has to do with an analysis of the results of Q1. Okay, so if we start off with the most outstanding figures, and this is something that I mentioned before, and the word record is going to be mentioned several times, we've reached a level of sales of 873.8 million euros, which is 6.3% higher compared to the first quarter of 2020 and 7.6% higher compared to Q1 of 2019. And our continuous improvement in margins means that we've closed the quarter with an EBITDA margin of 18%. So everybody knows, or you all know, that after the integrations we carried out in 2019 and 2020, you know that the pro forma EBITDA of the group was 16%. So that means that in this very brief period of time, we have been able to improve our EBITDA by 200 base points. And then the quarterly result of the group has been the highest of our history, and with 78.2 million euros in only one quarter. And we also have exceeded our excellent cash generation levels in this quarter, with the figure, 70% of the EBITDA has been generated in operational cash, and it's 105 million euros in only one quarter. And of course, We've also maintained our commitment towards our shareholders, and in the first quarter we've paid a dividend totaling 30.6 million euros. And then we have the net financial debt of the last 12 months, as from March the 31st of 2021, has been reduced by 84 million euros. And then we have the liquidity reserve, which stands at something like 1.4 billion at the closing date of March the 31st. But I would like to say that our objective, bearing in mind the major cash generation we've been having, is to gradually reduce this liquidity reserve so that we can improve our results even further. So if we now move on to the financial statement, you can see that the sales have grown 6%, and that EBITDA and EBIT have grown 12%, and that the EBT, or profits before taxes, the growth was 14%. And here we have the margins that we mentioned before in terms of EBIT 18%, but we also have EBIT with 13.3%. And the profits before taxes were 108 million. In other words, this is 12.4% of the sales. So we wanted to establish a comparison with the year 2019, which is the pre-COVID year, and obviously the outcomes of the results of this first quarter are much better compared to what we had in the first quarter of 2019. And well, there are two variables that we do not control and which go totally against us. Firstly, we have the production of cars, which is 11% lower than what we had in 2019. And this, in the global calculation for the year, more or less is 10 million cars less to be produced. And then we have the negative impact of the currency conversion only in the quarter. This has represented a slump of 51 million euros in sales. And as I said before, even with these variables that we do not control, the improvements of the group have been very good, very high. So this is something you can see in the margins, in the different margins, and not only that, but well, I must also point out that the margins are improving, and they're improving in all geographic areas, because you know that we prefer to talk about EBIT instead of EBITDA. So this is why EBIT of Q1 in North America has accounted for 17.8% relative to sales, and in China it's been 14.3%, in Brazil 14.2%, and in Europe 11.6%, in India 11%, and then in Mahindra Europe with a very significant improvement, nearly 10%. So, in other words, the consolidated figures of these regions deliver quarterly EBIT of 3.13. But if we move on now to the net results, and here we have the track record since 2015, and we can say that our growth continues. And by analysing Q1, which is where we stand, we see that we've improved our net results year after year, and well, last year, even in spite of COVID, especially in China, and in the last 15 days of March. So that means that we've had 7 years of growth, of sustained growth of our results. And then we had the COVID effect, as you can see. Well, it's only had a negative effect in only one of the quarters, and that is in the second quarter of 2020. And the third quarter, where there was still a ramp-up underway, we obtained a very specific, very high profit, which was the second best quarter of our history. And as I said before, in Q4 we fully recovered and we managed to reach a historic level. But moving on now to the balance sheet, well, this had a very big impact. The currency conversion rate had a very big impact. For instance, you can see the fixed assets, there was an increase of 83 million when the currency effect accounts for 77 million, and then the real continued with its devaluation, and we finished at 6.69 reais versus the euro, which means that it's a variation of 4.9% compared to December. And with a similar variations of about 4%, we have the rest of the fiat currencies have been appreciated. So this is why, because of this appreciation, this means that the net equity of our company has increased by 60 million. But not only do we have a conversion difference, but we've also had an increase in our equity that has resulted from the group and the minority shareholders, totaling 88 million. So in only one quarter, we have managed to increase our own funds and our net equity by 142.8 million euros. And then we have the other significant section. And once we've eliminated the currency impact of 70 million euros, you can see that 30 of them correspond to the payment of dividends, what we had on the balance sheet as from December the 31st. And as you know, this dividend was settled in the month of January. And the rest of it are variations that occur every year from the point of view of the fact that sales at the end of the year are not that intense. I think that it's in March, compared to March of the first quarter. But if we move on now to the cash flow, and this is something that we also mentioned where we reached the 70% of operating cash flow relative to EBITDA with 105 million euros. And in this first quarter is usually has a negative financial flow because of the significant investment we made in net working capital because of the payment of dividend. But this year, and even in spite of these variables, we have managed to obtain a positive financial flow. So that means that the financial debt has been reduced. It's gone down from 700 million to 1.5, and we will continue 105.1. We'll continue with a ratio of 3.48 times until we consolidate the second quarter and the third quarter of the year 2021. And now talking about our shares, well, the truth is that it's somewhat sad because what we understand is that neither this performance nor the excellent business prospects that our group has have been reflected in the practically flat evolution of our shares until March the 31st, 2021. And we trust and hope that the earnings disclosure and that the disclosure of the guidance will have an effect on this. And as our chairman said, let's only hope that our major cash generation will be valued and taken into account. Okay, item number 4, here we're talking about the goals set for 2021, and this is what I mentioned before, and that is that we have much more visibility than 3 months ago. And this is why we are now going to review our guidance, our objectives set for 2021. And without a doubt, it's going to be a year in which we will try to increase our market share and we'll try to go for higher margins. But I would like to explain why. Well, apart from our business management model that we've always defended, we also always have to point out that we've done things very well from a strategic perspective. Firstly, in relation to electric vehicles, we were one of the first companies to start off with we're making components for electric cars, and we can say that now the percentage or the presence of electric cars on our turnover is growing, so we have much more added value in electric cars compared to combustion cars. And secondly, we are focusing on comfort too, and it's something that could be risky because we are talking about some very significant sums, and this had to do with the product management and not process management. It had to do with tier 1 instead of tier 2, and 2 years have gone by, and the truth is that we have substantially improved our results, and I think that we are going to be improving over the next few years too. And then the third significant step has to do with a greater presence in Asia, because most of the integrations have also been carried out with that objective in mind. And this is why in China we are nowadays a very outstanding reference, and the same applies to India with the recent integrations, especially with the aluminium division. So we are one of the most relevant Western players. And these are the two markets that are growing most. And well, especially China right now, today, and India tomorrow, I'm sure that they are going to make us feel very happy. And well, you've seen throughout the presentation that our team is deeply committed, all the way from the board to all the executives. They're all committed to the management of ASG. So if 3 months ago we were saying that sales are going to be in line with the market or with market trends, now we say that we're going to be growing a high average digit above the market value. And if we said before that in 2021 we could reach an EBITDA in excess of 17%, today what we're saying is that this EBITDA could be above 17.5%. And if we said that the operating cash could be above 65% of EBITDA, today we're saying that it's going to be something like 65%. And so with all of this cash generation, what we were saying is that the EBITDA and financial debt ratio could be situated between 2.3x. And our figures say that it has to be 2.3 and 2.4x. So that means that in only one fiscal year, this major leap of 3.5, which is how we ended the year, has brought 2.3 to 2.4x. And the last point, the last item, which refers to an announcement. So once again, it's this greater visibility that makes us feel completely calm, and so that we can call the Capital Markets Day. We want all investors to be familiar with our challenges and the major difficulties we've had and the strategies we're implementing. We want people to know where we are heading with our company, or where we will be heading with our company over the next 5 years. So that's why we've set a date for this, that is June the 28th of 2021. So without further ado, and just to finish this presentation, you can just imagine that this year of the pandemic, well, adversities have been our companion along the way, but this has given us much more motivation and much more resistance, and it's made us feel stronger too. And we've also become much more efficient to deal with the next challenge. So please do place your trust in us, because we will exceed all of your expectations. Thank you very much. Chair, you have the floor. Thank you very much.